lately business. It's very unforgiving. And lately, Williams has had a truly stunning track record, so we keep going back to him. Ever since he nailed the bottom last year at a time when most investors had completely given up with this market, his predictions have been eerily reliable. If you took his advice about the late September swoon, well, you managed to sidestep that nasty decline that we've now pretty much hopefully digested. Pretty much. So now that the late September sell trade has come to an end, can we start buying? Not so fast. Let's set the stage. Williams is a master of coming up with forecasts based on either seasonal patterns or non-seasonal cycles that he spots in the action. At the beginning of the year, he showed us his annual forecast for 2021. Now take a look at this. All right? Pretty exact. This was his general roadmap for the stock market's trajectory this year. At the time, there was no indication of a bear market. His forecast was for a pretty bullish year. And for the most part, Williams has been dead right. He predicted buying opportunities in April and mid-July, which is exactly what we got. He predicted the usual September meltdown, which is exactly what we got. And now this forecast has another prediction, a major turn to the upside near the end of October. Just look at Williams' forecast paired with the Dow Jones Industrial Average. It is stunning how closely this tracks. It's been so right. Full disclosure, I'm not someone who likes to believe in the charts. I'm a fundamentalist at heart, meaning I prefer to make my stock picking decisions bottoms up based on how the underlying businesses are doing. But like it or not, technical analysis, when paired with historical analysis, often works, and I always include it in my thinking. We can't afford to ignore a powerful tool just because, in theory, it really shouldn't work. We don't need no stinking theory. Some people dismiss the charts as astrology, but if I knew any astrologist who could reliably make money in the stock market, you know what? I highlight their work too. Larry Williams is no astrologist. I think about his stuff when I do my investment club work because I don't want to be on the other side of it. Okay? In the end, we don't need to know why the method works. We only need to know that Williams has been remarkably accurate in his predictions, and now they're pointing to a terrific year-end rally that could start, but don't get too bullish yet. When exactly is soon? Well, now we take a look at a chart of the market's true seasonal pattern from data. All right, this is going to surprise you, but this is data from 1923 through 2020. Yet Williams points out that just going by the calendar for nearly a century, stocks have started rallying around October 29th. Doesn't always happen, but on average, the period from late October, don't say the 29th, let's use late October, through late December is typically the strongest time of the year for the market. In the past, short sellers have consistently been punished, and the longs have consistently been rewarded. Now, I think you got to approach this the same way we approached that late September swoon. That's historically been the worst time of the year for over 2 decades, so we told you to be extra cautious. We didn't know why the market might get hit, right? But if we knew this was a period of heightened risk when the market tends to be fragile, maybe that's all we needed. By the same logic, I can't tell you why stocks might run starting at the end of the month. But based on what Williams is showing us, we're heading into a period of heightened rewards, as if the pieces of information that come out are viewed positively. It's not just a seasonal pattern. Williams also likes to hunt for non-seasonal cycles. These are patterns that seem to repeat in a given security. Take a look. Right now, the most active cycles have been a 47-day cycle and a 150-day cycle. According to Williams, they're both forecasting a meaningful low at the end of October. So we've got two different chart techniques that are both calling for the same outcome. That's called confirmation. Now let's get specific. Remember when he predicted the late September swoon? Williams told us that the best time to sell historically was on September 17th. And I hit you with that like a mallet over and over and over again. And it was right. Then you had to close out your short position at the opening roughly 14 trading days. Right. How about the end of October trade? What's the best way to buy the S&P futures if you want to play this one? According to Williams, if you bought the S&P on the 22nd trading day of October using a 2,200 stop-loss order and holding a position for 3 days, you would have made money in 18 of the last 18 years. Come on! All told, this trade would have made you about 16 grand. However, if you held for longer, for 6 days, accuracy goes down, you only would have made money in 17 out of 18 years. However, your total gains would have nearly doubled. In short, this is a very reliable trade that also tends to have longer-term legs. There's just one problem. How the heck do you buy the S&P on the 22nd trading day of October when this year October only has 21 trading days? Well, wouldn't that be November 1st? Williams tested the same data for the first trading day of November, and if anything, the pattern's even better. If you bought the S&P futures on the first trading day of November with a $2,400 stop-loss order and held for 2 days, Williams said you made money every year for the last 31 years. Your gains would have run to 18 grand. If you bought on the first trading day of November, then held for 6 days, the trade gets a little less reliable. If only worked 30 out of the 31 times. But your total gains would have jumped to 42 grand, more than double. So will this pattern continue? There's no guarantee this pattern will work in 2021, but it's worked for the last 31 years, and Williams has been on a roll for the last 18 months. So I tell you, I wouldn't bet against him. Yeah, maybe I would start it earlier. Maybe I would. Maybe I'd start it maybe third week of October. But the bottom line, as we get closer to the end of October and the beginning of November, the charts as interpreted by the legendary Larry Williams suggest that the stock market could really roar. So maybe it's time to get a little more constructive as we near the historic glory days. Bill in Florida. Bill.
Hey, Jim.
Bill.
I have most of my retirement accounts invested in VFC stock.
Really?
And